We're also seeing a lot of those people that were renters slowly begin to shift back into becoming buyers. So all right, supply, demand, and elasticity, the basics of economics, and how does this impact when it comes to the value of homes, the missing middle, and also the value of rental properties in this market right now. So what we saw happen as prices started to rise over the last 4 years, we saw a particular segment of the market that were buyers shift from buyers to renters because they can no longer afford to buy. So if you think of an example of there's, say, 100 buyers over here and there's 20 renters, that's going to be the demand for those particular items in the market. So then when we saw of these 100 buyers, 50 of them became renters. Now we have 70 renters rather than 20, and now we have fewer buyers. So when that shift happens, that spiked our rental market massively because there was way more demand for the rental that were available. So with that, we saw rentals going into multiple offers. And these shifts with supply and demand happen all the time in our market. And that is truly what drives renters and buyers to dictate the price. And at this point in time, we've seen a massive amount of people shift to become renters and spike those rental prices over the last few years. And that is slowly starting to settle. So these rental prices in our market that were so skyrocketed are now, we're seeing them readjust and move into sort of a more reasonable place. And we're also seeing a lot of those people that were renters slowly begin to shift back into becoming buyers. So we're seeing the supply and demand shift and our market begin to settle here right now. So 2024 in our market is going to be a year where we begin to see our rental prices kind of come into balance a little bit. And we're going to see the buyers' confidence come back for the purchase price where we saw it spike so high. For example, Collingwood's average sale price at one point was around 1.1 million. And then November of last year, we were down to 790 for that month. So we are seeing everything shift and move, and we haven't solved the problem of the missing middle just yet. And that's going to be solved only by more units, smaller units, affordable pricing, because basically what's happened is the lower priced homes that used to be, say, 400,000 in our area are now 800,000. So that's a huge gap of affordability, not only just with the straight sale price, but now the carrying cost with these higher interest rates. So we're seeing everything kind of settle with interest rates, people getting used to what a carrying cost is for each property, what the affordability is. We're seeing less pressure on that rental market as people shift back to buyers. We're seeing rental prices come down. And overall, it's just super important to truly understand supply, demand, and elasticity as it affects things in the market. Look for a blog on that later. I'll explain that whole detail of the basics of economics. But our market is driven by supply and demand on the rental side and the buying side of things, which creates the list price, the values of homes in our market. And 2024 is going to be a big year where we see the market stabilize after 4 years of undulation and ups and downs and interest rates and all the things that happen here. So the stabilization of this market, the consumer confidence coming back, growing, prices stabilizing, and a consistency of unit sales. And we're going to be able to have stats we can count on without every month being such a shift. And we're really excited to see where 2024 takes the real estate market in Southern Georgian Bay.